Okay, hey everyone, it's Michael Valtos from Orderflows, and this is my market analysis recap for Friday, May 19th, 2017, and what a way to end the week. We had that big down day on Wednesday, we got some back on Thursday, and we got some back on Friday. And, even though we're not ending the week positive, the way it ended was a bit encouraging. This is the daily chart. This was Wednesday, the big down day. Thursday we got some back. Friday, very encouraging. We'll see how we reopen on Sunday night. So before we jump in, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Tools I'm going to use in this presentation are the Orderflows Trader, which is the volume footprint chart with my additional order flow tools to help your analysis. And additional tool is the Delta Scalper, which I developed to help find turning points in the market. So let's just jump right in. And I'll start first with the 5 years. 5 years has been interesting on Friday. There was a terrific trading opportunity early in the morning, Chicago time, for just before 5 o'clock. Now, you have this low, the low of the day at this time, 118.18 even. You get a divergence. You get the price rejector. Price rejector is something that's available for my Inner Circle members. And that's this green line here. You have a ratio, you have a divergence, and it's really all systems go. And if you bought it, from 118.19, traded all the way up into the up here to the 2022 area. Now, again, even though it had a nice move, the only thing I didn't like about it, I say I didn't like about it, but I prefer my trades to happen faster. It took about 2.5 hours for this bar to finish. We did put a lot of volume in here though, 50,000. When your normal bars are getting, at that time, this is pre-Chicago Open, so to speak, pre-New York Open rather. And it was just a slow go from the time you got the signal to the time you'd get in. You trade 18,000, 7,000 here, and at this time the market's not moving. It doesn't go against you or anything like that, but it's just market's sort of stuck in a rut. But again, the only thing is, it's the 5 years, and 5 years tend to move slow. But when the 5 years start to move, it moves. It can move nicely, and this was a nice move here. You come back down, you get down towards the low again, one tick above the low. No signs in there really to be getting long or anything. You just have the price rejector down there. Then you come up here, this is 11. You get the Delta Scalper given a sell. You hit the same level again. You come off like a tick in the next bar, and then the next bar does rally up to the high here. You do get another ratio, and it doesn't come off. Now, this is part of trade management. It's one of these things where the trade's not working out. It doesn't break in your favor. It doesn't go lower, and instead just hangs around most of the time against you. It's 12. Here is giving the signal at 12:07, 12:21. It's it's still against you. 12:32. It doesn't get any lower. It just hits the same level that you hit it earlier. And you're still hanging around here around, minus 1 tick, minus 2 ticks. And it's already 12:30. Here, 1:30. A move should have happened already, or at least started to. And instead, it starts going against you some more. So, you got to know when to get out of a trade. Then you do rally up to these highs. But again, this is Friday afternoon after 2 p.m. You do have price rejector. You got ratio as well. And again, you really don't muster any move. But, at this point, the cash is closed. So I'm really not interested in trading 5 years or bonds for that matter after the cash is closed. When I talk about cash, I'm talking about the bond cash market, not the equity futures cash market. This is bonds. Okay, bonds were also interesting. There was a few sell signals early. Yeah, 3:30 in the morning. Very tight range coming into the U.S. session, extremely tight range. Even though you have this high here, it's at 153.30. Your low at the time 153.22. So you're talking about 8-tick range. You do get a sell signal here at the high at 3:30 in the morning. It does come off, does go down into new lows. That's nice. But again, coming in such a tight range, I'm usually hesitant to take any sort of trades. That's just me. Unless I don't know. At 3:30, it's just not. Honestly, is it worth it? Can you take it? Of course you can take it. But don't expect big moves, when you have a very tight range, I guess is what I'm trying to say. Then you come down here, you got a divergence, no reason to buy that one. You got another divergence, no reason to buy that. You do trade back up to your high, no reason to sell. Coming down in here, you get the delta scalper, giving a sell signal. You do make a new low. You do have a ratio with the price rejector. You don't have a divergence, which I'd like to get. Do you get a rally? Yeah, you get a little bit. But you're still right on the back of this price rejector as well. So, if I was short this, I'd be looking to actually cover it, possibly. You do trade back up towards this high here before going down into the new lows. At this new low, this was the interesting one. This one was the one that was very clear. You have a ratio, you have a divergence. 35.31. This next ratio is 35.31. That's just coincidence. It's not like it's a ratio. It just involves the numbers in the footprint. The volumes being traded, that's all. That's why you got the same ratio. It's no mystical thing. But you do get a nice move from 153.16 all the way up to the 24 area up here, 25. At this area, you get the price rejector, which is giving you a bearish sell signal. You also got the delta scalper. Does it come off? It comes off a little bit, not that much. Come back up here, same combination. But it comes right down into the single print here, and then we rally up to these new highs. Delta scalper is named Delta scalper because ideally it's more designed for short-term trading signals rather than long-term. Even though you do see some nice long-term trends on the back of it, so you might want to, if you're trading that, think about trailing your stop. Then up here later, again, this is at 3 o'clock. It's a ratio with the divergence, but again, I'm not really interested in taking that at 3 p.m. on a Friday. Next thing I'll talk about really quick, E-minis. This is a 10 range chart. I'll talk about the 4 range, but I just want to highlight this 10 range chart here really quick. Now this is something I talked about, a way you can help determine if you're coming into a trend day. And I talk about this in my inner circle for the members of the inner circle, how to define trend days early, because if you could get in a trend day early, right? Imagine, right? This is your daily chart, okay? And so imagine, you're trading, before you get this big move to up to 87.5 or whatever, and you're trading down here in the 70s, maybe you're at the high. This was, your high is here at this time, 71.5 at 5 in the morning. Okay. And why is that important? Well, what did I do with the chart? Here it is. If you're trading down here around 71, 72, 73, 75 even, and you do get a rally later all the way up to 87.5. Now, I'm not saying you'd sell it up at 87.5, but if you're trading down in the mid 70s and things are setting up for a trend day, you want to get in as soon as possible. We all love these days, these big candles like this, If you could get in, somewhere towards the bottom part of this candle before you get the big long up candle or the big long down candle. So one of the ways I talk about is watch the divergences. This is a divergence with the ratio. Again, this bar takes 2 hours to form in here. Granted, it's coming into Friday morning. There's a lot of stuff going on in the markets the last couple of days. So honestly, I think people are a little bit hesitant to really take any position on it until the cash opens. But once the cash opens, we move. We move. Okay, you come up to 79, you got a failed divergence. 82, you get a failed divergence. 83, a failed divergence. So you're getting multiple failed divergences, okay, in a short period of time from 8:54 up to 10:30, so about an hour and a half. And then once you take out these highs, again, you get a nice move up, 83.5 all the way up to, like I said, 88. Up here you got a ratio. So you got divergence, no ratio. In the next bar, you got the ratio. And I always say, be careful selling divergences, because on the way up on a trending market, you're gonna get a lot of failed divergences. Look for something in it. And I always say, get a divergence with a ratio, as I showed you on the bonds. Now you got it here. And even though you don't have the ratio on the bar with the divergence, look at the next bar. Okay, it's fine to take it on the next bar, because you might not get it up there right on. You might not get that price rejection on the high or the price defense on the high. But once you start moving and you see price rejection, you see price defense, either one, it's usually a decent sign. And we make this move from 83.5 all the way down, and below 80s. We get down to what is that, 78, 79. Got a couple price rejector buys there. Now, even though I was just talking about the failed divergences, now this is a 10 range chart, and you'll say, well, it gave me the buy at 83. Yeah, it did. But if you're looking at, I'll pull you the 4 range chart, which is a faster moving chart. It would be, if I could find it, it would be a lot more clearer early. Okay, so let's take a look. I don't go back that early. Oh, so we'll just go back. Okay, so 3 o'clock. This was the time I started on the other chart. So we'll just take a look. That's that one divergence. You come up here, you get a ratio with a divergence. And you sell off, from 70.5 all the way down to 67, 68. That's on a 4 range chart. A 2-point move is a realistic target. Don't try to get 10 points out of a 4 range chart. That's why you trade different types of charts. You trade 10 range charts when you're trying to capture bigger moves. You trade 4 range charts when the market's slower and you want to catch smaller moves, more often. Okay, so coming into the cash open here, 8:30. Okay, so you got a divergence that failed. It's right ahead of the cash open at 8:39. You do have a stack selling a balance as well, but I know that this is changing because the cash is open and you're getting a lot of other stuff coming into the market at this time. So even though you got a lot of buy and sell signals going off at the same time, it's the cash open, and that's when the big flood of orders start. That's when all the algos start. If I don't care whether you believe me or not. I know, because I sat on trading desks. I know what time people start their algos. They start in the S&Ps. They start them on the cash open. Why? Because that's when it's most liquid, and that's when they could move that's when they can move size. But more importantly, they're usually starting an algo at the cash open because they're doing something in the underlying, I'll say cash market, but the underlying equity market. So they're doing their hedges in the futures against the cash position that they're working with in the stock market. That's why they do it on the cash open. That's why they start a lot of these algos on the cash open. So anyway, so I know that, and I know you're gonna get a lot of volatility there and a lot of back and forth. So anyway, failed divergence. Really what I'm looking at is, and then you get this run up here, 77, failed divergence. Here we got 3 failed divergences. Don't have a failed divergence up here. You get another one up here, 82. Okay, you come off a little bit, more failed divergences. So if you're not convinced already that you're going to start to run, then you at some point you just saw a 10-point move, and so hopefully you'd be realizing that, hey, you know what, we're moving already. Maybe I should get on board. But ideally you want to get in as I'll say lowly, as low as possible. But sometimes the market just doesn't give it to you. Now I'll just go through this really quick before I show you another chart. You got a ratio with divergence fails, come right back up with a stack buying and balance. Got the ratio divergence afterwards. You come off a little bit, you get your 2 points. Failed divergence there. Failed divergence, well, I'll say failed here, but you got a ratio bounds. You got some heavy volume up here, and then you got the ratio afterwards. You come back up, making new highs all the way up to 88, high of the day right up here. You don't have a divergence, but then you start getting, you got 3 in a row. You don't get the pullback that you like, unfortunately. You do sell off. Price rejector giving a buy down here, delta scalper giving a sell there. And a few others sell, buy here, and then you just sort of go sideways into the close. But again, this is why you should keep multiple time frames open, because sometimes if you're trading too long a chart, I say too long a duration, I guess would be the proper word, you can miss things. And this is the S&Ps. This is a 3-range chart this time. So let's go through this again. 830, 2372 failed divergence at 73, at 73 3/4 failed divergence, and this is within 10 minutes of the cash opening. And then you shoot up. So we got 3 failed divergences. So watch for signs to buy, to be getting long, because things are picking up here. Because on the 3-range chart, you've already got 3 failed divergences in 10 minutes. You don't have any failed divergences here. You got stacked buying imbalance. But really, once you start getting back, past 3 or more failed divergences in a very short period of time, watch out when you start breaking out. You start breaking out, boom, you get a very aggressive buying, stacked buying imbalances. Another 2 buying imbalances here, and a stacked buying imbalance on the 3-range chart. There's only 4 price levels, and you're getting a stacked buying imbalance, which minimum of 3 is my setting. So that's, to me, that's kind of important there. You get all the way up to 79, you got another failed divergence with the ratio. We do come off a little bit, a couple points. Another failed divergence. At this point, if you're not convinced, you're still trading below 2380 on the 3-range chart. That you're getting all these failed divergences, so this market's already running. I don't know what other sign you need that the market's running besides a bunch of failed divergences, and buying imbalances when you take out the highs. So this is 2380 you could be getting in, and it just keeps going higher. It just keeps going higher. Here's a 3 in a row. You don't get the pullback. I mean, you do get the pullback between these 2 point of controls. You start shooting higher, and you just keep going up and up and up. This was a delta scalper that didn't work out. And again, you just keep going up and up. 86, here before you get up to the high of the day. And then here you get the divergence, nothing. But here you get the divergence with the ratio. Next bar after it, you do have a bullish ratio. But here you got a stacked selling imbalance. I mean, so you've got 2 things up here. You got 3 things. You got the divergence, you got the ratio, you got the selling imbalance. Yes, granted, you do have a bullish ratio here, but really, at this level up here, I'm more interested for finding a legitimate reason to be getting short, right? Because I know that if I could get short up here, I could just hide behind this high as my stop, and that's going to give me a low risk trade. So I'm getting in at 87. Say 86.5, 87. My stop's just right up here at, just behind 88, 88.25, 88.5. And, you catch the nice moves there. You're going to catch bigger moves sometimes going into lows than necessarily going in or coming off highs rather than going into new highs. You go into new highs, you can run into resistance on the way up. But generally, I find for me, it's always been more profitable to sell off highs. Again, I'm not trying to pick the high. Rather, I'm looking for levels to be getting short at the high, because something in the order flow is alerting me that, hey, you know what, we can possibly be selling off. You got a double top up here, you got less volume the second time, you got a ratio, you got a divergence, you got price rejector, or not price rejector, point of control up near the top, then you get a stack selling imbalance, you got a single print. I mean, at that point you should be already convinced. And is there any reason to be getting out of this trade once it starts coming off? No, there's not. And it just it happens pretty quick. Once you get past here, 203, 206, 207, 209, the bottom just drops right out, and you move down from 86 down into the the 80 area. And again, I mean, to get 5 points, 6 points out of a 3-range chart is terrific. But I'm not saying you can on every time. I mean, there were some failed divergences, or sorry, there was divergence with ratios you only got 2 points out of. But honestly, on this move, if you're trailing your stop, there's no pullback here. There's no reason to be getting out. Okay, like lots of times you'll start selling off, then you get a green bar and starts ticking up, or you go sideways. It's just straight down. It's a 45-degree move, and it's very fast. It's very fast. Okay, so this is the Euro currency 8-range chart, and again, it was kind of choppy. We did trend higher most of the day, but still kind of choppy. Up here at this high, you do have a divergence. The delta scalper giving a sell. You don't have a ratio. You also got the transition giving a sell. You do sell off a little bit. This here is a delta surge, this green one. we just sell off and go sideways, take out the high again, delta surge kicking off. You just keep popping higher. Again, that's there's no you have the price rejector here, but you don't have anything else to go together with it. You get up here, you got a ratio with a divergence, and you do sell off. I mean, it's a decent sell off, about 15, 18 ticks before you rally back up and sell off some more. Divergence, nothing. This is the delta scalper giving a sell. Came right back on the next bar. Then again, you got some other indicators here. You got this trap traders indicator. That's this green arrow right there. And then you start rallying. You get this big rally up here. You get up here, you've got the ratio, you got the divergence. You go sideways, unfortunately, for the next 40 minutes. Not really going anywhere. You do get bullish ratio here, bullish ratio there. Again, I'm not really looking for reasons to be buying up here. You trade back up within one tick of the high, and then you start coming off again, going into the close. So was there anything worth trading? I mean, you had a couple of ratios with divergence, that give you some decent trades. All right, so this is the Japanese yen. Let's take a look. This is early morning. Looking for any sort of decent, legitimate signals here at 7:30. You do get Delta Scalper giving you a little sell. It's not the biggest move at this time of day. It's just before 8 o'clock. I mean, things do pick up after 7:20, which is the old floor open. But again, so is it a decent move? Yeah, I don't know. It's about a 8-tick move, but you do rally. You start to rally. You got all these buy here, these green arrows, which indicate you got trap traders down here, and guys are going to start covering. You do rally. You get a nice big rally up. Again, you got the trap trader signal there. We do shoot up a little bit. Delta surge giving you a sell right here at 90, around the 90.05 area, and you just fall over. You do get Delta Scalper giving a buy, but it's on a red bar, so you shouldn't be taking it. Okay, you shouldn't be getting long on a bar that can't even close higher. It's going to fail. So getting a sell from the 06, 05 area, and you just go lower, shoot lower, keep shooting lower. Point of control right on the bottom of this bar, and you do shoot up, but you mostly go sideways. You got point of control same level. The point of control one tick higher, point of control same level. So I know the market's going sideways at this point. I really shouldn't think of holding it much longer. I mean, you can just keep going sideways, and once you go sideways, really the inertia from the reason for taking the trade is died out, right? There's not much more reason to be taking it. And then you come off, Delta Scalper giving you a sell there. You get the push, big, all selling here, all selling imbalances on the way down. You do pop up a little bit and go a little bit lower. You get down, from the 72 area down into the 60s, mid 60s. But you just basically go sideways. Every time you get a decent buy signal, it doesn't really work out. A decent sell signal doesn't work out. It comes right back on the next bar. We do rally up here. This is already just before 10 o'clock. And then what else we got? We got some moves up here. You do have some signs of trap traders at the top of this bar. Delta Scalper giving a sell there. A buy. So you got a buy and a sell signal, one right after the other. And what do? You do go up, but it's after this signal here. But you know what? It comes right back up, right? And what if you're looking at these arrows again? These arrows are not to be giving you red light, green light systems. I mean, it is to say, okay, get short, but you still got to manage this trade. You still got to watch what's happening. You're starting to sell off, but all of a sudden you see aggressive buying come back in. You start seeing aggressive buying back in, and you're short. That's not a good sign. You should be looking to cut it. Price rejector down here, and you got a one lot being traded on that low. Again, what's the importance of one lots? Small prints is because it's just an indication that there's no selling going on anymore. I mean, if only one lot trades into the bid, then the market turns around and goes higher. It doesn't get any clearer to that. Then there was lack of interest selling. I mean, that doesn't take a brain surgeon to figure out. And then you start going into the close down in here. You get this bit of volatility. You know, here just after 2 o'clock, again, you get the price. You get the trap trader signal up there. Here you get the delta scalper given. Actually, that's the scalper. No, that's the surge rather. Then you're coming off. But again, it's already after 2. You know, any sort of moves you get are going to be kind of muted after 2 o'clock. Even though the price is moving, it's just, you know, the FX markets, you know, really quiet down after 2 p.m. in the cash market. After 2 p.m. on Friday, you know, everyone, you know, Europe's gone home, Asia's asleep, and traders in New York are looking to go enjoy the weekend. So, excuse me. Sorry, I keep coughing. Still just getting almost over this nasty cold. Every time I think I'm over it, it sort of comes back and rears its head on me. Okay, so is there anything else? I haven't looked at beans. I mean, I looked at beans earlier. Well, you know, I'm recording this on Saturday night, so I'm sort of going off some of trying to remember the stuff. So, okay, so beans, you know, 8:30 is the, whoops, this is the wrong day. Here it is. I was going to say that looked familiar. You know, with beans, 8:30 is the reopen. Am I looking at the right contract? July? Yeah. So 8:30, you know, you do start coming off after 8:30. You open up around your high, kind of thin volume. You know, 8:35, you get the ratio. You know, here you got point of control at the bottom with the ratio. Here, 8:35, you do get the delta scalper given a buy. You know, here you got a delta scalper given a sell. That one didn't really work out. It just sort of came back on you. Then you hit the high. You got a ratio with the divergence. Comes right back with the bullish ratio, but we test the high again. We got another divergence. You're starting to see some imbalances coming in. Then you get the stack selling imbalance, but it doesn't make the move, and it comes right back with a ratio. Now again, you know, I often talk about selling imbalances, stacked imbalances. When you have you know, whether you have a bullish stacked imbalance or a bearish stacked imbalance, watch the next bar, because it's going to be very telling on what's going to happen with this trade. And if you got a stacked imbalance and a stacked selling imbalance, and it comes back with a bullish ratio, it's probably not going to work out. You know, it's got a very high percentage of failing. You know, you want a red candle. You don't want a green candle after you get this signal to get short. And you can see it doesn't work out, and it just rallies right up, makes new highs. You know, here you got point of control at the bottom. Yeah, okay, but again, I'm not too convinced at that point that this move is necessarily over. And then you get down in here. You know, it's already 113. You know, this market closes, you know, around you know, 115. So, you know, I'm not looking to take any trades down in here. Let's see if I can find the crude. Crude should be in July already, if you haven't changed your charts. Just go back here. So, you know, we were rallying in the morning. You got the delta surge. You know, this is 8:30, 8:38. You got delta surge given the buy. You do rally up from, you know, the 40, 45 area all the way up into the, you know, up into the 70s. You do start making some new highs here. You got divergence with the ratio, and if, you know, you're looking to get short, you know, you're staring at this stack buying imbalance, which isn't good, but it comes right back. You don't get past this high, you don't get stopped out, which is encouraging. And again, you get another divergence, and you get a ratio in the next bar. So, you know, if you're already short, there's no reason necessarily to be cutting it at this point. You don't hit your stop price, and but unfortunately, you just go sideways. Okay, so you know, you get your short, and then you start lining up point of controls 1, 2, 3, 4 at the same level. You know, after the third one here, again, I'm not looking at this third one. I'm looking at this one, this one, this one. You should be considering, you know, cutting your trade already, because it's just not working out at this point. Now here you get, you know, delta scalper giving a buy, going into a high. Okay, you know, take it for what it's worth. I'm not a big fan of buying into highs. Delta surge giving a buy, but it's a red bar, so, you know, you shouldn't be really too interested in taking it. You come off a little bit, go sideways, and then you start making new highs going into the close. Okay, so the last chart I'll talk about is the Aussie dollar. Good day, mate. The Aussie dollar, it's an interesting contract because you get a lot of activity in the Aussie dollar in the evening session. I say evening session, I mean Chicago time, okay? I mean, from the reopen until from then on, because basically, that's the clock in Australia versus the time change in the U.S. is almost opposite. But so that said, here you got the price delta scalper giving a nice buy here. You do get a nice run up here. It's just straight all the way up from what was that? Where were we trading there? 74.15 all the way up to 74.65. Now you're up into the European session. You have a divergence, don't have anything there. But here you got the delta scalper given a sell. Okay, and it's given to you in the bar right ahead of the price rejector. People always say, delta surge, and this is the delta surge, this is the delta scalper. People always ask, what's the difference between delta scalper and delta surge? Is you're not going to get the same signals at the same time. Delta surge is a little slower than the delta scalper. And you can see, if you had the delta surge, you're catching an extra bar of profit in here. If you're trading the delta surge, it comes off, bounces up a little bit here. You do have a bullish ratio. You still got negative delta though. But here, you're getting in that much earlier. 74, 52 rather than 74, 40, 46. And what's that worth for you? An extra 8 ticks, 6 ticks here, 8 ticks there. It can make the difference on, if you're getting in, an extra 6, 8 ticks on each trade, at the end of the year, that stuff adds up, man. 8 ticks. There's people just happy to make, 8 ticks on a trade, and this is giving you an extra 8 ticks profit potential. Then you sell off. You get down here to 74.30. You start rallying. You start seeing price rejection. Now here you have the positive delta. Here you still have negative delta with this ratio of 59.33. The delta in the bar is still minus 142. So in the back of my head, I'm still thinking there's residual selling. Then you start coming here. You see delta changing, positive. Single print, ratio, and you just start rallying back up. But really the big move was this one from 74.50 down into the 74.30s. So that's 20 ticks right there. And again, if you're interested in trading Aussie, you can easily trade it during the Asian session. It's one of the few contracts I think you can trade during the Asian. Look at the volume; it's decent. You're talking 3,000. It's just as good as if not better sometimes than what you're seeing during the U.S. trading day. Okay, so thanks for watching this. To learn more about the trading software used in this presentation and how you can profit from order flow trading, visit my website, orderflows.com. And thanks, and I hope to hear back from you. Bye-bye.